silent scream. Heartbeat loud in the in-between. World asleep but my mind won't rest. Standing right on tomorrow's edge. Numbers fall and the candles shake. Every risk is a step I take. No applause and no safety net. Just a promise I haven't met. I've been down where the doubt is loud. I've been lost in the digital crowd. But the signal cuts through the noise and it pulls me now. I'm standing on tomorrow's edge. I'll jump anyway. No guarantees, but I'm on my way. If I fall, I'll rise. That's the game I play. Tomorrow's edge. I'll jump anyway. Late night glow from a silent screen. Heartbeat loud in the in-between. World asleep but my mind won't rest. Standing right on tomorrow's edge. Numbers fall and the candles shake. Every risk is a step I take. No applause and no safety net. Just a promise I have. I've been down with it loud. I've been lost in a digital crowd. But the signal cuts through the noise and it pulls me now. I'm standing on tomorrow's edge. I jump anyway. No guarantee, but I'm on my way. If I fall, I'll rise. That's the game I play. Tomorrow's edge. I jump anyway.
All right, legends. Hope you all had a fantastic weekend. Oof, what volatility we got over the weekend. Fear. I know there's war at the moment, missiles flying, and I'm sure you guys are up to date. I think, all over social media, I've been following some of it. Right, legends, it's not good out there. It's, what can I say? I'm not going to share my opinion about this. You have your views. You can watch social media. You know exactly what's going on. But the question is, how does it impact the markets? So it is Monday. What I like to do on a Monday, okay, is go through some higher time frame analysis first. Then we can go into, so I'm going to start here with a daily time frame. We can then go into the 8-hour, 4-hour, 1 hour, and work our way down to see that, well, once I've painted the picture on the 1 hour, on the larger time frames, like the daily time frame, you can see how the smaller scenarios fit in with the larger time frames. Okay, I always like to say, you need to stand a little bit back when you view the oil painting so that when you zoom into the details, you know exactly what you are looking at. Legends, remember to smash up that like button. If you haven't done so already, this is where we do pure technical analysis. So if you're not subscribed to the channel, go ahead and subscribe, okay? Because the technicals that I provide is how I approach the markets. As per the disclaimer, I am not a financial advisor. I'm purely showing you from a technical perspective how I approach the markets. I use combination of Elliott wave theory, trend lines, volume, swing failure patterns, harmonic patterns to determine those high probability trading scenarios in terms of how I execute trades. So welcome again. Let's get the party on the road. And as you can see, I am here on the 1 hour time frame. Sorry, on the daily time frame, on the daily time frame. Okay. And maybe, just before I start, let me just quickly say hi to the people that is popping here into the stream. Is this live? Yes, this is live, Mariella. This is live. Welcome. I haven't seen you here in a while. Welcome to the live stream. Bonjour. Welcome. Good morning. Trick. Morning. Welcome to the live stream. It was perfect Fibonacci move. Yes. Good move, Andy. Right. Guys, we are going to change the channel's name. I know it says Andy at Bitcoin Census. I am Dewald. Myself and Andy are joining forces. I will be doing the morning updates. Andy will be doing the afternoon updates. There will be shorts in between. Okay. Myself and Andy are joining forces to bring more value to this community. Okay. I've already told everyone on my previous YouTube channel to come here and subscribe if they don't want to miss out on the action over here. Okay. And sometimes myself and Andy might mix it up. I might do the afternoon. He does the morning, depending on, you know, when we take a little bit of a break. If we get sick, we're human, we get sick as well. Okay, Mr. Joan, welcome to the live stream. Hi, Dewald, Distant, Music. Hello, Legends, welcome. I'm going to sell my spot and buy back at the 40s. Right, obviously, guys, I can't give financial advice. Okay, good morning, Dewald. Thanks for streaming. Absolute pleasure, Jeroen. Okay, so now that we've said hello, did you fire Andy? No, we're going to join forces. Right, we're joining forces here on the stream. Andy will be live a little bit later, bringing you the alpha during the day. So let's dive into the daily time frame. A couple of scenarios that I just quickly want to highlight. And as price develops, remember guys, my technical analysis is based on current price action. As price develops, scenarios can change and probabilities can shift. So on the daily time frame, one of the scenarios that I'm keeping an eye on is to say that, well, okay, now we have to throw a couple of ifs into the equation. Okay, so if the bull market ended over here, and this is only the first leg to the downside for the bear market that's now correcting this impulse. Guys, I just need to take some stuff here out the way. My mouse needs some space. Okay, here we go. Okay, let's take the scribble here out the way. Let's start again. Right. So basically you have a 1, let me switch the magnet north, 2, 3, 4, and you formed an ending diagonal in a fifth wave. 1, 2, 3, 4, 5. I have to put an ending diagonal in here because this is a 3-wave structure. Okay, and I'm, you know, if I zoom in here, guys, so this is basically the problem with the scenario is that if you zoom in here, it is not great to end something in a 3-wave structure. And when you end something in a 3-wave structure, there's always a higher probability to take out this high again before you take out the low. And I know it's still very far away from this low. Okay, but if this is the end of something in which you ended in a 3-wave structure, the probabilities from a technical perspective are always high that regardless of what happens here, you're going to form a higher low and continue momentum to take out that high because you ended in a 3-wave structure. It's not great, but in this scenario, I have to count this as an ending diagonal because number 5, okay, ended in a 3-wave structure. And an ending diagonal has to be 3 waves. you have to count a three-wave structure in here somewhere in a wave 1. And this is another problem with the scenario. This looks very impulsive, and I, from a technical perspective, struggle to count an impulse in this wave 1. But if this is the end, I have to force this ending diagonal inside of this structure. Okay, now you guys can already see from a technical perspective where my probabilities are starting to lie. Okay, so let's entertain this scenario. If this was the end, there's an issue, and this entire ending diagonal is also an issue. Okay, because on the higher time frame to end something in an ending diagonal, diagonals always carry the lowest probability. Again, we have to entertain the scenario. Then you could say that this is only the start. Because from a timing perspective, the correction should only end minimum 16 November. And that is taking a time fib from the start to the end. So this correction is too short in time. It's not time for the correction to be done. If the price fell something like this, and we were now after the 0.382, I would have said, okay, the impulse has now corrected itself, and from a timing perspective, it makes sense to go and claim that high again. So in this scenario, the bears are way in control still at the moment. I know that was really broken English over there, but in this scenario, the bears are still in control, and you want the corrective structure to still continue. Okay, and I've just painted a little bit of a zigzag over here to say that, well, what could happen is you finish up, you bounce, you finish up, and then after the 0.382, you have a three-wave corrective structure. It becomes an interesting buying opportunity for momentum to continue up to at least go and claim that high. Okay, so you can see that in this scenario, this could only be the start of the bear market. This is only the start, the first leg to the downside. And how I would count this leg is to say that, well, this could be the formation of a WXY. So now let's zoom into this corrective structure. Okay, and this corrective structure is the most bearish at the moment, where you're basically forming a W, ABC and a W, WXY in a X, and now this is your first leg down in an A, B, C. So this can still get really nasty to the downside. Usually the maximum target for a Y wave is the 1.382, which is $34,936. So this can get nasty to the downside. So just wanted to highlight this scenario. After a WXY to the downside, which is a three-wave structure, you can see that from a timing perspective, it doesn't make sense to end it over here. So this can extend. And I mean, guys, corrective structures can morph into many things. The simplicity that could happen here is to say that, well, this forms a wave A. Okay, let's take the scribble here out the way. Okay, so what now could happen is, let me make it nice and big. This entire structure forms a wave A. Then you go up for a B, and then you go back down for a C. Okay, let me make that just painting out a very simplistic corrective structure that could still unfold over here. Okay. Let me switch on the lines so that everyone can see clearly. Right? This is something that could still play out. So if I bring it back, look at how confusing it can get. I'm just trying to paint out the most confusing scenario that could play out over here, because it's not to say that price just falls down the whole time. It can move up again, because if this forms a wave A in a three-wave structure, WXY, B has to tap at least a 0.9 Fibonacci when you take your fib from the high to wherever this low is going to form. B has to tap a flat target if this is an A in a three-wave structure. So you can imagine the emotions that people are going to go through. Bull market is back, baby. We're going to go and claim that high. And literally just before we claim the high, price falls back down and it goes and it claims the low again. And this is a very common corrective structure, which we call an ABC flat. Okay, B can take the high as well, as long as it's respecting flat targets. The first flat target is the 0.9 when you take your fib retracement from the high to wherever the low is going to form. Okay, so if I put it here on the maximum target, you can see, well, this could still get nasty. 1, 2, 3. But then what's most important is you want C to finish after the 0.382. And then you continue to the upside to continue a proper bull market. Okay, so this is one scenario here on the daily time frame. Okay, let me take the scribble out here. It has to be said, guys, ladies and gentlemen, that for me personally, from a technical perspective, this scenario carries low probability because of the issues that I've shown you during the beginning when I started out. Three-wave structure up, ending diagonal, it's not great. Also, I think the biggest issue inside of this structure is here. That is the biggest issue. You have to count a three-wave structure in wave A. And when I go and I look at this structure on the smaller time frames, like the 8-hour, 4-hour time frame, it looks very impulsive. It is very difficult to fit a three-wave structure inside of wave 1, which gives the scenario lower probability. Okay, also wave 5, the minimum requirement for this wave 5 is to take the high of 3, which is extremely rare. Most commonly, wave 5 at least taps the 0.618, which it did not. So there's a couple of things wrong with this scenario over here. Okay, so now I'm going to show you also here on the daily time frame scenarios that actually carry slightly higher probability because of the issues that I've identified in this structure. Remember guys, this can still play out, and that is why I'm talking about it. When a scenario has been invalidated, I don't even talk about it. So the reason I'm still talking about it is to say that from a technical perspective, it carries low probability. There are issues inside of the structure. But if we do, for example, okay, finish a correction after the 0.382, which basically means that the bear market still continues until the end of this year, it's definitely a buying opportunity. Okay. Right, but I mean, there's also a buying opportunity here, because if this does form that three wave and this becomes an A and you go up for B, I mean, that is a big move to play. You look for shorts and you play the momentum back to the downside. So definitely I will partake in this scenario. If price had to waterfall here to the downside and it starts slowing down between $41,000 and $35,000, I will definitely be looking for a swing position. Okay, and remember the disclaimer, guys, I can only share with you what I will be doing and how I approach the markets, because make no mistake, I want to take advantage of this move here to the upside. Okay, right, let's move on to the next scenario. Remember to smash up that like button. 10k. Oh my god, devil, 10k. Now I don't think we'll get back down to 10k. Okay, nothing's ever guaranteed in the market, but I mean, in the worst case scenario, let's say the WX or the ABC plays out here. You form A, you form a B, and you form a C. The requirement is that at least this C wave, the minimum requirement is that it takes the low of A. That's the minimum requirement. Okay, so as soon as price is here, for me, that's a buying opportunity. I don't care how deep it goes, but that's where I will be starting to accumulate very aggressively. Because of how this structure ended, I know that there's a high chance that price can still form a higher low and continue to take out the high. Okay. That will be a nice little discount, and I'm not sure if we're going to get this scenario. Okay, so moving on. Which scenario now starts to carry higher probability? So let's start with this one over here. Okay, this scenario basically says that the bull market ended over here. And all of this has been part of the corrective structure up until now. Technically, this scenario makes more sense. It has less mistakes inside of it. Guys, it's not because I want it, or I want the price to, I want us to have a bear market until the end of the year. I'm just showing you technically what's making the most sense and which scenarios has the least amount of mistakes inside of it. So technically, this scenario actually carries higher probability, including the ones that I'm about to share after this. So I started off with the lowest probable scenario, which can play out, but now technically this one makes more sense. Okay, you have formed a 1, 2, 3, 4, 5. Bull market ended over here. You have formed an ABC in a wave A, 3-wave structure. You went up for a B flat. Now that little 3-wave structure is allowed to end on a 3-wave structure in a B wave. So can you guys now see, okay, that now this structure is an impulsive wave in wave 5, tick. So there's nothing wrong. B wave is allowed to end on a 3-wave structure, WXY. Maybe there was a WXY. I can count a 3-wave structure inside of this move. So technically, this scenario looks better. Okay, so now let's look at the corrective part. So if bull market ended over here, and I'm now counting all of this as part of a corrective structure, now the following starts making more sense. Now let's zoom into this. Okay, so that everyone can see. All of the following scenarios are based on this, where the bull market ended over here. Okay, so now you have basically formed, since the end, you have formed an A, a B flat, and you are now busy or finished with your C. And this is now the question. This has to be a 5-wave structure. It can be an ending diagonal, it can be a 5-wave impulse, but it has to be a 5-wave structure. A, okay, is a 3-wave structure, which means B has to tap a flat target, which it did. B is a 3-wave structure. Now this has to be a 5-wave structure. Okay, I'm taking you guys step by step, okay, in terms of how I'm approaching the market. I just want to put the music a little bit softer here in the background. In this scenario, you have formed a 1, 2, 3, 4, and a 5. Okay, 5 is maybe done, or you see that little arrow that I drew over there, it can still make one more low, because this structure looks like it needs one more low to complete the 5th wave. But the reason I put it here, because when I go into the smaller time frames, you can force a 5-wave count in here, a 1, 2, 3, 4, 5. So there's a chance that the low could be in. Okay, and you have finished your 5-wave impulse, and now you want to see continuation back to the upside. Okay, it has to be said that extended 5th waves like this, okay, this is now an issue over here with this structure. It's a little bit of an issue, is it is rare to see an extended 5th wave. It's also rare to see a 4 that breaks the channel. When you draw a channel over here, okay, connecting 1 and 2, you broke out of the channel. It's rare, but it did not get invalidated. So you can see there's also a couple of issues with this structure. Okay, in terms of this structure here to the downside. Okay, so I'm just purely highlighting to you guys what's carrying higher and lower probability. So in this scenario, you can move 5 and C over there as well. So if price does go down and claim $60,000 again, well, it's basically a 1, 2, 3, 4, 5. You expect price not to capitulate to the downside. You basically want to sweep the lows, okay, and get acceptance back above this low. Now, to me, that will be a trading opportunity from a swing trade perspective, because I know where to put my stop loss. I see a sign of strength. there's a high chance to at least come and claim this pivot over here. Because in a 5-wave impulse, most commonly the retracement at least hits the 4th wave consolidation area. So that's a nice little trade here to the upside. Okay, so I'm sharing with you how I would trade these scenarios as well, but you can see that price needs to come to my area of interest. It needs to show me a sign of strength. And remember guys, I'm going to zoom into this structure in a moment. I'm now dancing around here on the daily time frame to show you how this fits into the bigger picture. Okay. And how that structure fits into the bigger picture if I move 5 over here is because you can see here that you have a 1 and a 2. There's a wave there. And then price fell to the downside on increasing volume. So you can label this a wave 3. That's your 1, that's your 2. Okay, so 1, 2, 3. This can be 4 and 5 to the downside. And after a 5-wave impulse, to complete your C wave, you at least expect a corrective structure to go and claim this consolidation area. So that's an, guys, can you see why I am looking for a swing position in this zone? If price claims $60,000, it's a very interesting zone for me to start looking for longs because I want to take advantage of this move. Okay, and yes, this could also be the end of the bear market, and if price does this and it forms a 5-wave impulse to the upside, it is the retracement that becomes an interesting buying opportunity. So make no mistake, I'm interested in longs and I am interested in shorts. If price forms a 4 and a 5 here to the upside, I really don't mind getting stopped out of this short, okay, to take advantage of this move. But there's still a lot that needs to happen before price gets here. Okay. Just showing you what could play out here on the higher time frame. Right, and this is why myself and Andy, when we speak about this structure over here, that's why we zoom into that 1, 2, 3, 4, 5. Okay, because we know that this can be the end of something and maybe the start of something new. Okay, I know that people are also asking to say that, well, Dewald, what if 5 ended over there? Okay, and then what I'm going to show you on the smaller time frames, what I'm going to show you inside of this structure is that it does not look technically great for the bulls. Because if this is the end, you want to count something bullish inside of this structure. And technically, when I zoom into that structure, I will show you the probabilities. Okay, for now, just a little bit of a hint. It actually looks like this is most likely to happen before we just get a relief rally here back to the 4th wave at $97,000. Okay, right. So now let's still stick on this scenario where this was the end. Okay, I'm counting that as the end, that little pivot, because this looks like an A, B, C in an ending diagonal. Okay, contracting ending diagonal. But basically I'm counting this as a 3-wave structure in a 3-wave structure in a B, and now 5 is either in or you make one more low, claim $60,000, find your feet here at $53,000 to $48,000. Which also, these two pivots looks very interesting for me from a swing failure perspective. So basically, price dips below, it gets acceptance back above. I can catch a nice little entry there to the downside. Okay, sign of strength, you have that consolidation area. Okay, so there is some nice support to the downside. Now, let's move on. Remember to smash up the like button. Okay, if you're not already subscribed, this is where we do pure technical analysis. Right now, this scenario has a couple of variations. This is also something that could play out. Okay, you still have your A, you still have the B, but the C ends a little bit differently. The C ends in a ending diagonal. Now, based on what I'm seeing at the moment, this actually looks better. Diagonals never carry the highest probability, but based on how price action has formed to the downside, it actually looks quite sexy. Okay, you have a three-wave structure in one. And when you zoom into that structure, it really counts better as a three-wave structure. You have a beautiful three-wave structure in a wave 2. And you have a three-wave structure in wave 3. What you now expect is 4 is either in, remember, does not have to tap the channel. Doesn't have to. As long as it stays contracting. You could even do that. Okay? But the invalidation is if it starts forming a parallel channel. That's your invalidation. You can see if I move the line over there, okay, and just take the scribble out the way. The invalidation for this scenario is that if price continues to move up and it taps that line, my invalidation, okay, no more ending diagonal, because it has to be contracting, and expanding diagonals carries extreme low probability. Okay, so in this scenario, let's just put it back here. Okay, price could still do that little zigzaggy here up, claim the highs, reject and fall and form another 5-wave to the downside, where you basically have 1, 2, 3, 4, 5 ending diagonal in an ABC. So in both the previous scenario and in this scenario, still, it doesn't matter how you count the structure, whether this is a 1, 2, 3, 4, 5, or whether this is a 1, 2, 3, 4, 5, I'm looking for a long in this zone. Can you guys see how with different counts, I get the same answer? Okay, interesting longing opportunity, at least at a bare minimum, a corrective structure that comes and claims this consolidation area over here. Okay, this can turn into a 1, 2, 3, 4, 5. Correction becomes interesting. I want to see sign of strength, bullish CVD to join the momentum back to the upside to go and take the high. Okay. Right, guys. So this is definitely one scenario that could still play out over here, but you guys can see the similarities. Okay. So those are basically the higher daily time frame scenarios that I wanted to go through over here. Between 2 and 4 does not allow overlap in diagonal. Let's put that diagonal. Oops. Yeah, I do have a very bullish scenario that I don't want to share here at the moment. 1-to-1 between 2 and 4. Between 2 and 4 does not allow overlap in diagonal C. Yeah, I mean, ideally you want to see overlap, but it doesn't allow for overlap, especially if you're going to claim this. Well, it depends on how aggressive. Yeah. Yeah, I see what Mr. Joan is highlighting over here. Okay, in a diagonal, ideally you want to see a little bit of overlap. You want number 4 and 1 to overlap. But I think if you're going to overlap, okay, you're going to most likely claim the invalidation. Okay, what a class. Anyways, guys, let's move along. Okay, so now we go into the 8-hour time frame. Okay, 4-hour time frame. Let's go into the 4-hour time frame. Now that you know the larger time frame scenarios, now this is where I focus on this structure. Okay, this is now where I'm focusing on this structure over here. And like I said, okay, this is now the scenario, and you all know it very well. We've been talking about this scenario for weeks now. Okay, in this scenario, you have a 1, you have a 2, okay, you have your channel. Most commonly, your 4th wave does not tap the top of the channel. So far, it has not. It's now grinding against the bottom of the channel over here. So in this scenario, you expect a 1, a 2, a 3, highest amount of volume. So you label it a 3, look at the volume. And now you're most likely forming a triangle in a wave 4, which is perfectly allowed. Wave 4s are allowed to create triangles. Wave 2s are not allowed to create triangles, and it did not. It actually created a flat structure, if I'm not mistaken, or WXY. Okay, but it wasn't a triangle. In this scenario, keeping it simple, you want the 4th wave to start topping out. Maybe it's going to top out here somewhere, okay? But you do not want the 4th wave to tap the top of the channel. And then you expect another 1, 2, 3, 4, 5 to go and complete your fifth wave. And then you have your 1, 2, 3, 4, 5. So can you guys see why I'm still interested in a longing position? So from a swing trading perspective, this for me is the best longing opportunity. Not yeah, this is not a swing trade territory for me at the moment. Okay, because now when I zoom into this structure, this is where, okay, I'm going to discuss the probabilities. Okay, so started off with that scenario. Now we can go into the 1 hour time frame. Okay, can you guys see? Just working my way down into the local time frames. When I look at this structure that is formed, this massive consolidation area, I just want to highlight that, can you guys see how complex a corrective structure can become? When we made this low and price started moving up here, okay, I remember very clearly I told the community that, guys, this is still very fresh. When price was here and when price was here, when price was here, I told everyone this can still morph into so many things and we don't know what it's going to morph into. Okay, because I know, do you guys remember this? Okay, do you remember this? Incredibly corrective. Okay, when we made the low over here, look at what it morphed into. Most importantly, do you guys remember this? Okay, after you make the low, look at this massively complex corrective structure that it formed over here, which turned out to be a W, X in a triangle, and an ABC in a Y that rejected at the 786 to the dollar almost, and we fell to the downside. So it's very difficult that after price has made a fresh low on an increasing amount of volume, you know, you can try and say, okay, this looks like a 1, 2, 1, 2, 3. Oh, where's the 4 5s? Okay, now it fell down. What now? So sometimes you just have to wait for the structure to form so that you can see which one carries the highest probability. And when price formed over here, we started getting a clear picture of what could happen over here. But we had to wait. But make no mistake, there was many trading opportunities inside of the structure. Just like now, as the structure is becoming longer and longer, it's giving us more hints in terms of what is actually forming over here. Since this low was made, okay, now that we have a large structure, we can now try and determine which scenarios carries higher probability to either move up or to move to the downside. Okay. So, before I get to the summary, because I do have a summary over here, you guys can most probably see my summary. Okay. Before we get into the summary, let's discuss a couple of scenarios. First scenario is we form a triangle, and I think I did make a short about this on Sunday. Okay. You've basically formed your 3-wave W, a complex WXY in an X wave, and now you're ending off the structure in a Y, in a triangle. Okay, A, B, C, D, E, and then you get that to the downside. So here's one scenario that points out, okay, I purposefully put my, you guys can see where I put the invalidation for this scenario. I put the invalidations for this scenario at $70,000, which is basically this high, because this can still form a 3-wave structure, not claim the high, and then fall down in another 3-wave structure, which means C moves over. So the triangle can get larger, but my directional bias is the same. You basically form either a larger triangle in an A, B, C, D, E, then fall down, or this is a A, B, C, D, E, then we fall down, but the directional bias is the same. You should not take this high. That's why I put my invalidation there for now. Okay, yes, technically I could move my soft, and I will call it soft invalidation. I can move it over there to say that, well, maybe the C wave is done. Okay, in this, if I move C over there, it means that E is not allowed to claim C. So if you want to be a little bit more technical with tighter invalidations, this is what you could do. You have formed a three-wave structure in a WXY, WXY, or a WXY. Somehow you have to count a three-wave structure which actually carries higher probability than having a 1, 2, 3, 4 extended fifth wave. Doesn't make sense. It does count better as a corrective structure. You have formed a three-wave structure in a B. You have formed a three-wave structure in a C, and now you want to see A, B, C, a three-wave structure in D. You go up for E, should not claim the high of C, and then okay, the probabilities lean on the side to fall to the downside. Now you can see, even in this scenario, in a W, X, Y, okay, you expect price to take the low of $60,000. Okay, let me clean up the scribble over here. And what you will see now is that I've got a couple of variations of the same directional bias. Okay, so it's either a W, a X, and a Y. And remember, Y does not have to claim the high of W because of how deep the retracement went. When you take a fib from the low to the high of W, you drag it across. When X, just from an education perspective, when X taps the 0.7 Fibonacci, okay, it significantly increases the probability that Y does not have to take W. And usually what happens is it either forms an A, B, C flat, which is the most common, or it forms a triangle, but it doesn't claim the high of W and it falls down. Okay, let's move on to the next scenario. Very similar. Can you guys see? It's just an alternative triangle scenario. You've basically formed a W, a X, and now you just have a larger Y wave that's forming a larger triangle. A, three-wave B, C, okay? And now this is also the question. This is where, okay, it's not too clear just as yet. Is this D and is this E over here and Y is already finished? Well, then you expect this high not to be claimed again and price needs to fall to the downside to go and claim the low of $60,000. Or maybe it's going to extend a little bit more. Okay, you have your C, okay, you form a three-wave structure in D, you form a three-wave structure in E, and then you fall to the downside. But can you see my directional bias is the same? Whether you fall from here, whether you fall from here, in this scenario, you expect the low to be claimed in $60,000. Okay. Right. Now, next scenario. Okay, now we're switching to bullish case scenario. So for the bulls out there, you've been scratching your head thinking to yourself, dear Walt, what if this is the low? Then what? What if price starts moving up? What scenario supports bullish case scenarios? Remember guys, a great technical analyst will always have a bullish and a bearish case scenario. Always. Okay? If there's a technical analyst that only shows you one direction, you really have to question what does the other side of the token look like that they are not seeing. So, but that's why I like to give probabilities to each scenario, is to say that, well, based on what has formed over here, technically, which one carries the highest probability? Do we move up or do we move down first? Okay, or maybe up and down first. Okay, because you guys know, if we do move up, you could still form that ending diagonal that I've shown you on the larger time frame. Okay, that can be your wave 4 and you fall down here in a wave 5. Remember that contracting ending diagonal? So there's still a shorting opportunity. I must say guys, the best short from a swing trading perspective for me is over here. And the best long is over here. And all of this is just noise in the middle. Okay, because for me as a technical trader, that's easy to trade, and this is easy to trade. The noise in the middle is where you have to apply your day trading strategies, okay, and you basically just scalp the highs, take profits at the lows, and that is what we have been doing inside of our community. And remember guys, if you want to be part of our community where I provide all the updates, I've already provided all the updates that I'm sharing here, I think Andy provided updates yesterday as well. I provided some updates on Saturday, and it was quite ironic. I'll show you guys now. DM me the word access on Telegram. Here's my link, and I will send you instructions on how to join my community. Okay. What was interesting about the scenarios that I shared on Saturday, there was only 2. Okay. And on Friday, I did a live stream and I told everyone which one carries the highest probability. Because if I go here, and I know it's very small, I'll zoom in here, but on Saturday, when we had the crash to the downside, I basically painted out 2 scenarios. I said, guys, these 2 scenarios is the only 2 that I'm interested in right now. Okay. The first scenario was we have formed an WXY, and you now completed the ABC inside of the Y. And I wrote to everyone, this is the low that needs to find its feet and we need to move back up. This is the only bullish case scenario that I see at the moment. And guess what? Price moved up from there. The only bearish case scenario that I could see was the second one, 4 5s. I said, guys, you want to see continuation. And the fact that we got a bounce didn't give the scenario for me the highest probability. But also in Friday's live stream, I told everyone why technically for me, the 112 doesn't look great. Okay. And it was literally, guys, it was as simple as when I zoom in here into the 15-minute time frame and we look at the structure, just a little bit of education. Okay. If you want to form, okay, definitely it's possible. 1, 2, 1, 2. Okay. Maybe another 1, 2. Yeah, it's already starting, you know, you're getting, it's starting to look out of balance. And then we fell and I said, you want to see continuation. And then we stopped and we started consolidating with a high amount of volume. And I said, guys, you want to see continuation. It needs to fall and it needs to do that. It needs to repeat the structure. So the bullish case scenario for me, from a technical perspective, actually made more sense. But there was so much fear in the market, I think that most people favored the bearish case scenario. I did not trade over the weekend. I highlighted the scenarios because I saw the drop and I said, guys, I know we got the drop, but your bullish case scenario says you stop and you could go back up, which we did. The bearish case scenario is you want to see continuation, and we didn't get the continuation. Okay, but also, when I did my live stream on Friday, I told everyone that is incredibly short compared to the correction, which for me gave the 112 scenario lower probability, where I then favored a WXY to the downside, A, B, C. That made more sense. Okay, just a little bit of education there, but let's jump back here into the 1 hour time frame. Let's talk about the bullish case scenarios, looking at the same structure. Can't see the price. You should be able to see the price. Okay, you should be able to see the price. What a class. Can't see the price. Okay, you should be able to see the price now. There we go. What are you trying to say, Devil? You said more drop in weekend and some got wrecked. How did some get wrecked? Okay, what are you trying to say, Devil? You said more drop in weekend and some got wrecked. No, here's what I said. I said it's either going to be a 112 or a 112. Okay, you want to see continuation or that. So how did you get wrecked? If you got wrecked, then obviously you don't have proper risk management. You're not planning your trade properly. You don't know where to put your stop loss. That's what I said, guys. I didn't say anything else. I said bullish scenario, price finds its feet here and starts moving up. Bearish scenario, nested 1-2s, price needs to form 4 5s to the downside. Okay, and then I also imposed the invalidation for multiple 1-2s. I said, guys, as soon as price claims $64,000, 849, there's no more nested 1-2s to the downside. Okay, and what happened? Back onto the 15-minute time frame. Okay, guys, you cannot blame someone else if you get wrecked. Like literally, you cannot blame. It's easy to blame someone when you lose money. Okay, I did not tell anyone to short. I did not tell anyone to long. I showed you what I see. I said there's a possibility that the low is in. For 4 5s, the 0.618 should not be claimed. Okay, and I had this fib over here. I said as soon as the 0.618 is claimed, that invalidates 112s to the downside. Price came up, invalidated that, and we moved up. And that's what I said, guys. That's what I said. Invalidation for 4 5s to the downside. Sorry, guys. I don't mean to get angry. I get angry at people blaming me for their losses. Because at no point did I say, okay, enter, short. I will most likely not be trading today. Just saw the drop and wanted to update everyone quick. These are the two most relevant scenarios. Invalidation for this one and or price finds its feet. I did not tell anyone to short or to long. I told everyone I'm not trading. I was taking a break. I was spending time with my family. Okay. Right, let's move on, guys. Let's move on. Okay. It's easy to blame someone if you're losing money, but you need to have a proper trading strategy with risk management in place. Okay, I will never tell anyone long now or short now. I will share with you what I am doing and how I approach the markets. And I think it's in your best interest as a trader to align your analysis with my analysis and make your own trading decision. Okay. Right, apologies, no blame, only clarity. Okay, cool, man. Cool. Scalpstronaut, what a legendary name. Scalpstronaut, yes. Oh, I know who this is, Marilla. I know who this is. Formerly known as, I'm not sure if I should say, Mr. Scalpstronaut, formerly known as. Right. People should not trade at all if they can't take their own responsibility. I agree. Sorry, Mr. Davey. Okay, it's just I get very passionate, okay, when people blame me for their trades, because guys, I do, and I'm not sure about Andy, I'm sure him as well, I do get a lot of personal messages of people when I take a trade that liquidate themselves. And then my question is always, I've lost 0.5%, for example, of my portfolio because I was wrong. How did you liquidate your account? Okay, because people get overexcited, they FOMO, they go in too heavy with position sizes. So the reason I get so passionate, okay, and a little bit worked up when someone says you said is because I never said, and you are responsible for your own trading. Okay, I think the community knows how I trade by now. If I'm wrong, I most likely still make money when I'm wrong. Okay, because there was a couple of trades which I took. Okay, let's go back here. There's a couple of trades that I took that I shared with everyone. This one, I got in at the 1.618. I showed everyone, there's my entry. I was a little bit late, but make no mistakes. When we took that high, I took profits. I protected my position. When price came back down, which it did, I got stopped out with profit. So can you see that even when I'm wrong, I'm still making money? And it took me a long time to master the skill. It really took me a long time to master the skill in terms of I'm not just, it's going to turn around and I'm only taking profits at $100,000. Okay. I get in, I protect position, I take profits so that when I'm wrong, I get stopped out with profits. That's what's most important to me. Okay. This was a trade that I took on Friday. 8 o'clock on my time on Friday. Okay, but I'm sharing with everyone how I approach the markets. Okay, took this trade while traveling back from dinner. I went out for dinner. I was in the car traveling back. Okay, took the trade in the car. Sorry, could not share because I was traveling. Just sharing what I'm doing. 5-wave moved down, tapped the 1.618, got in, already took profits, position protected. And remember, guys, if you want to be part of this community where I share everything, okay, there's another scenario that I pointed out last week as well. And there's been many scenarios. You can see there's another long that I got into. Okay, you can see how I played beautiful swing failure from the low. Okay, and right, always get stopped out with profits. That's most important. If you want to be part of this community, DM me the word access on Telegram. Here's my Telegram. And I'll send you instructions on how to join the community. All the T's and C's and everything you need to know. Remember, guys, the disclaimer for this channel is also here down in the description. Okay, now, sorry, I want to get back to the bullish case scenarios. I got carried away. Right, legends, let's look at this scenario. I must now put it out there. The following scenarios for me does not look great. Okay, let's start with the first bullish case scenario. And this bullish case scenario, out of all the bullish case scenarios, carries the highest probability. Okay, let's start. Where did I save this one now? Is it this one? No, it was this one. Right. Here is a bullish case scenario. You have formed a A. You have formed a WXY inside of a B wave. And now what you want to see is for price to keep on moving up in an ending diagonal. 1, 2, okay. Or maybe it explodes here to the upside. It can even be an impulse. You have a 1, you have a 2, and now this is your first 1, 2 inside of your third wave. 1, 2, 3, 4, 5. Okay. If there's overlap between 4 and 1, like Joan pointed out on the bigger scenario as well, then I will label it an ending diagonal in a wave C. Or it can form a normal impulse. Okay. So basically, okay, let me rather do this. You form a 1, 2, 3, 4, 5. You don't want to see overlap. That's an impulse. But you're looking at the same thing. You're looking at an A, B, C, or C. Okay, but basically you claim the highs. Okay, now the reason I put an ending diagonal in here before I even looked at the impulse is because there's an issue over there. It does not look great for the bulls, okay? And it's just probabilities, guys, at the end of the day. If I go back here onto the 15-minute time frame, but now you guys see, okay, why, if price had to move up, I am still interested in a short. As soon as price claims this little high, okay, I will be looking for a short above this high. Okay, and I have my levels marked out, and I will share and I will keep the community up to date, okay, when I'm going to enter this swing short, because this is a pretty decent move to play to the downside. You don't, for me, I don't need a lot of capital. I need a low leverage position, 3x, 5x, and I can make significant profits here to the downside. When I'm scalping the range, okay, I usually have tighter stop losses, and I take more aggressive profits. But when I'm looking for a swing trade, I usually have an invalidation that's a little bit further away, and I build a position with low leverage, low capital, because the movement is quite significant. I don't need to be aggressive, okay? But in this scenario, okay, this structure, okay, for an impulse, let's first discuss the impulse. Okay, if you want to form a 1, 2, 3, 4, 5 here to the upside, you have an extended fifth wave inside of this structure. You have a 1, 2, 3, 4, 5, a very long fifth wave. That's the problem. And for an impulse, an extended fifth wave is rare. And this is why I had the ending diagonal over here to say that, well, it counts better as a 3-wave structure, 3-wave down, 3-wave up, you want to see a 3-wave down, and you want to see another 3-wave up. So at $74,000, $75,000, 1-to-1 extension, very common C-wave target. But you guys can see it depends on how the price is going to move up. Okay, so if price just starts rocketing from here, and it shoots like a hot knife through butter, I know there's a high chance that this can be an impulsive structure. 1, 2, 3, I'm going to wait for 4, and then here when it forms number 5 is where I'm going to look for shorts. Okay, if price climbs up, takes the high, and falls down and there's overlap, I'm going to prioritize an ending diagonal. And I'm going to be looking for a short over there, not over there. So it changes where I'm going to be looking for the short depending on what happens over the next week or over the next coming days. So yes, we do have a bullish case scenario. Okay. And the one thing I want to highlight here, guys, is for me from a technical perspective, okay, you can see that it's still a corrective structure. You have A, B, C. Whether C goes a little bit higher or whether it rejects here, it's a corrective structure. Increasing the probabilities, when you have an ABC, you're going to take the 60K low again. So even if price moves up, there's a higher chance it's going to fall down again. Okay. Now, the reason I cannot give the scenario the highest probability out of the corrective structures that I've just shown you is because an ending diagonal, okay, never carries the highest probability. You always have to look for a normal corrective structure before you start thinking about diagonals. Also, in diagonals, I really want the fourth wave to be in before I actually talk about diagonals. Okay, and we are still, you know, price still needs to do a lot of things before we can actually consider the scenario. Okay, but at least we know, you know, and the reason I wanted to discuss it today is like, what if price just accelerates here to the upside? Well, that is what I'm looking at. An A, B, C, a 1, 2, 3, 4, 5. You wrap up. I think the highest target you can smash with this scenario is $82,000, $83,000. And I will make no mistake, this zone for me is a very, very interesting shorting opportunity, because corrective structures, even after you take the high, carries higher probability. And I'm a probability trader. Okay, so now let me discuss the most bullish case scenario. Okay. So in the most bullish case scenario, and this is why even if we take the high, I still favor the corrective structures, there's issues. Okay, because I know people want bullish case scenarios as well. So in the scenario, which has not been invalidated, I'm just discussing the probabilities, is that you have formed in the green box a wave 1. And I have purposefully highlighted how long it took wave 2. So in an impulse, this carries low probability to have a wave 2 this length compared to wave 1. I can also measure it from a time. You know, if you want the exact time, I can take my time fib from the low to the high. Wave 2 was more than 5 times longer than wave 1. So based on probabilities, Elliott wave theory teaches you that when you have a corrective structure that is this long compared to the impulse, it's usually a higher chance of being corrective, where you can replace that rather with an A, and then this is a B, and then you form a 1, 2, 3, 4, 5 in a C, and you fall down. Okay, so can you guys see how I bring probabilities into this? But it's not to say that it can't play out. But in this scenario, what you want to see is a 1, 2, 3, 4, 5. But now you can see where I'm interested in the short. I'm interested in a short right over here, because this can also be a C wave. This can be an A, B, C. 1, 2, 3, 4, 5 in a C wave. The difference between the two scenarios is this. That's your difference. It's only that little wave over there. So I know for me, technically, it makes sense to look for a short over here. Because if you do not form this, okay, and price starts falling down and you have overlap between wave 1, okay, there's a high chance you're going to take the low. And then it was an ABC and not a 1, 2, 3, 4, 5. If price stops me out, and you guys know me by now in the community, make no mistake, I would have taken profits. But if price stops me out and now you have a 1, 2, 3, 4, 5, well, then the retracement becomes interesting for longs. But regardless, whether this is a 1, 2, 3, 4, 5, or whether this is an A, B, C, it's a very interesting shorting opportunity. Because there's a higher chance that if price rejects here, it's going to take out the low based on the problems with the impulse. And that basically concludes all the scenarios that I'm watching. So guys, I know that this was a long live stream, just basically taking you through all the scenarios from a daily time frame, 8 hour, 4 hour, and now I'm here on the 1 hour time frame. Okay, I just wanted to show everyone how I technically approach the markets, and based on invalidations and how the structures are forming, okay, I get to a summary. So here's the summary in a nutshell. Okay, based on all the scenarios that I've just shared with everyone, unfortunately, whether it is an unfortunate for you, for me it's another unfortunate, it's a probability. Based on all the scenarios, most scenarios point to the downside. Okay, if price does break the triangle, if it does break the triangle and takes that high, there's a good chance it's going to take that high, but I will be looking for shorts. But based on the current price action that I see today, and based on all the scenarios, okay, the probabilities are higher for price to move down and take this low, where I will be interested in longs to take out that high. In the rare scenarios, if price does continue to the upside, well, I'm still looking for shorts to take out this low, or this low. Okay. Also, from a simplicity perspective, what I wanted to point out is that maybe it is just as simple as a normal triangle in an ABCDE. Okay, so when I go back here onto the 4 hour time frame, and you look at this structure, okay, wait, I'm a little bit zoomed out. Okay, and you look at this structure over here. Okay, remember what I said, guys, a fourth wave is allowed to form a triangle. You have a 1, 2, and maybe it's as simple as that. You have a 3 with the highest amount of volume. You form an A, B, C, D, E in a triangle. This scenario has a clear invalidation at $70,000, and you want the low to be taken again before you take out the invalidation. And then you have formed a 1, 2, 3, 4, 5. Interested in longs. Okay, now let's go through some comments. Sorry guys, I know I didn't go through the comments as I wanted to. I've just been so focused here on the technical analysis. Let's go. People should not trade at all if they can't take their own responsibility. Yes, I have gone through that. Let's scroll a little bit here. Mr. Matt in the house. If you guys haven't checked out Matt, he provides excellent technical analysis and updates on the market as well. Go and check him out. Okay. Yes, Mariella already said it. Go and follow Matt. Taking into consideration the market reaction on US Open based on the war that's going on, other than technical analysis, do you think there will be a short squeeze to push out the early shorts? Yes, the only short squeeze that I see, guys, I would actually love for this scenario to play out, okay? Technically, at the moment, okay, based on probabilities, it actually makes more sense for price to fall from here, or maybe up again and fall, or maybe fall, okay, without taking this high. But I would love, okay, I would love for this scenario to play out. Not this one, this one. Because it's a better risk to reward. Guys, I want to be bullish. I want price to go up. My spot bags benefit from it as well. So for me to come onto a live stream and tell everyone, this doesn't actually look great, okay, it's just based on technicals. But I would love for this scenario to play out, because if I can catch a short over here, it's a better risk to reward instead of shorting from here to the downside, okay? It's a much better risk to reward. It's also easier. And I know it might sound weird for some people. It's easier for me to short above the high. And it's easier for me to long below the low. But I will keep the community up to date. I will tell the community where I am planning to enter, where my invalidations is, in which levels I plan to swing failure, or how I plan to get into this trade. Okay, for me, technically, it's easier to look for a long over here and a short over here. So I would love for this ABC to play out. A, B, C. Technically, it doesn't look great. The bearish scenarios carry higher probability. Okay, and they are not easy to short. These bearish scenarios, okay, are not easy to short. There's one. Well, it just depends on your risk tolerance. You know, okay, so let's say you enter a short position over there. You know exactly where your invalidation is. You're targeting below $60,000. Right, so there is a shorting opportunity. It just depends on your risk tolerance and whether you believe the market is still going to fall to the downside. These scenarios have invalidations. Okay, I don't like that stop loss. It's just my personal preference. I would like for price to move a little bit more up before I wanted to get as close as possible to my invalidation. I'm just that type of trader. Price needs to be as close as possible to my invalidation so that when I'm wrong, I lose the least amount of cash. So yeah, for me, is not a great short. It's in the middle. It's in the middle of the range. So for me, technically, this is not a great short. But if your analysis says that price is not going to take these highs, and we are going to move down first, well, there is a trading setup. You know exactly where your invalidation needs to be. Okay, it just does not fit my rules from my trading perspective. Okay, that stop loss is 5.6% away. It's not a risk tolerance that I'm comfortable with. If price moves up a little bit and I can de-risk my position, now it becomes interesting. I want price to get as close as possible to this line. Because if I can enter over here somewhere, okay, I only have that risk to contend with. For me, the most important thing in trading is how little can I lose when I'm wrong. And for me, yeah, it's not how little. It doesn't make sense unless you go in with a low leverage, low capital position. But I'm not going to take this trade. I'm not taking this trade. If it falls down, I am more interested. If price falls down, I'm interested in the long. If price goes up, well, I'm interested in the short. Those are the two best areas that I am interested in. Okay. You are acting as authority by teaching and posting chart scenarios, even though you don't tell anyone to trade based on the signal. The community will take action based on the post. Add disclaimer next. Yes, I do have disclaimers inside of the community. I have disclaimers inside of my YouTube channel. And very often when I do post what I am doing in the markets, I will always follow up by a message by saying, guys, remember risk management. Remember to protect position. I have protected my position. I have taken profits. So when I've protected my position and I have taken profits and someone gets liquidated or loses a significant amount of cash, I cannot be held responsible. Okay? Cannot. Guys, I'm sharing with you what I do and how I approach the markets. Okay, and it's in your best interest to align it with your technical analysis. Devil, do you have and use X? Would be nice to have you there. Oh, I do have an X account. I actually stopped posting in there some time ago. Yeah, I don't know if it's something that I want to pick up again. It takes a lot of time, guys. YouTube, keeping the community up to date, then adding X to it, and I do shorts on YouTube as well. I kind of feel like I have so much to keep myself busy with that I don't want to add more to my plate so that I cannot trade. I still need to trade, guys, and I need to give myself time to trade. And then when I trade, I want to keep the community up to date as well. So I have fallen into the trap in the past where I do too many things and then I end up not trading anymore. Because you're always posting and you miss the trade, the alarm goes off. It becomes crazy. So I'm just always trying to find that balance between having enough to keep everyone updated and add value and not doing too much so that I stop trading. Okay, because remember, guys, trading by itself is a full-time job already. Okay. Good morning and thanks for the update, Jackie Wood. Thanks for joining the live stream. We have Andy's mom here in the comments section. Why don't you assign percentages to scenarios portrait? Yeah, guys, maybe I need to assign percentages a little bit more specific. But yeah, okay. Currently, the bearish case scenarios carry the highest probability. That's all I can do. High probability, low probability. What I can tell you, okay, that this scenario, this one, carries the lowest probability out of all the scenarios that I've shared today. Okay, so for the bulls, it really does not look great. To form the 1, 2, 3, 4, 5, this scenario carries the lowest probability. So even when you take the high, okay, the probabilities are still higher that this is corrective rather than impulsive, and you're going to take the low based on current price action. Make no mistake, if price does that, I will very quickly say, well, we have, sometimes it is what it is, a low probability scenario is showing its face over here. Once I see this, okay, that little structure to the upside, I will be interested in longs with this correction. So even when I'm wrong, the structure can show me that I'm wrong. Guys, I cannot bank on this over here. Do you guys see how I approach the markets? If I'm wrong and price shoots up here and it consolidates and it shoots up again, I will very quickly change my mind based on that. But the technicals needs to show me that I'm wrong. Okay, and that a low probability scenario is starting to play out. Based on the current price action, this scenario carries the lowest probability. Okay. Right, guys, thank you so much for joining the update, the live stream. I hope you've learned something. Remember, I will keep the community up to date. If I do plan to enter a trade, and if I do enter a trade, I do share what I'm doing and how I'm approaching the markets. Also, the smaller time frames, the 5-minute, the 15-minute time frame, what is happening here more locally. I'm going to post some updates in terms of what I see here more locally. Okay, in this little structure that will be shared inside of the community. I know that Andy showed a couple of scenarios yesterday, and if you want to be part of the community, DM me the word access to Telegram. There's my Telegram link, and you'll get instructions on how to join the community. Thank you so much for watching. Thanks for smashing up that like button, and until the next one, cheers for now.